So basically what we're going to cover is the importance of a strategy in general. We cover that a lot, but I don't think that we can emphasize this enough. The low cap coin strategy, the prerequisites that you need to know in order to do that. Then we'll explain it a bit in detail. We'll go over how we can find those coins and sectors and setups, everything we're going to talk about, how we can distribute our account for the highest level of success, and how we can fight FOMO at the end of the day. Right, so first of all, before we go into anything, any ways of making money, we need to reiterate and understand why we have a strategy and why a strategy is important. All right, so let's get into it. The people at QC in the QC Discord know this already, but we don't do anything without a strategy. Why? Because a clear, thorough, tested, and proven strategy and the ability to execute it is the difference between people that constantly lose money and people that can make consistent profits out of the market. This is something that we covered a lot, but we need to have a strategy that is thoroughly tested and that has clear rules, because when we're in the moment, when we're actually trading, and there are emotional triggers in the market that trigger us all the time. We have FOMO, we have fear, we have greed, all of it at the same time, right? And in that situation, in that mental state, to expect yourself to make fast, good, reliable decisions is not very responsible. So to fight that aspect, what we do is we create a strategy beforehand, because we have basically unlimited historical data that we can work with, that we can play around, test, and fail there. And then once we're actually live trading, we understand what strategy we're using, why it works, why it doesn't work when it breaks, and how to act in those situations. All of that is part of having a strategy and part of developing a strategy. So going based on an uneducated feeling in any market is a recipe for failure, since the markets are literally designed to trigger emotions and create actions that are completely illogical, like removing TP levels when you see the price flying to them. This is something that I've seen many times. This is something that I've seen within our hedge funds too. We've been trading the stock strategy for a long time on higher time frames. So, our trade would usually look like we see the setup coming. It's pretty clear that the price is going to, say, dump in this situation. And it takes around 3 to 4 days for that move to actually happen. So in those 3 to 4 days, we just position ourselves as best as we can, and then we wait. And as we wait, that anticipation builds, and we had some traders wait correctly, position themselves correctly. And then as the price started dropping a lot, which was good because we were short, and it was flying towards our TP levels, I have seen a trader remove the TP levels seconds before the price was getting hit because of greed, right? And what did the price do? It hit our TP levels and then reversed. And that person was lucky to get out of the trade at break even. And, we're not talking about small numbers here. Like that, those TP levels would be like 200 grand in profit. And so that's basically, we can go to that person and say, hey, you removing these TP levels, you being emotional in this fraction of a second, just cost us a Lambo. Would you like to have a Lambo? Well, you're not gonna, because you just lost it. That's literally, like, people don't realize that those are just numbers on a screen. But if you realize that profit, then those are actual numbers that you can pay yourself out. So if you think about it logically, it's pretty much insane that a little emotional click of a button can have such big impact on the real world, which is a Lambo or not a Lambo, or anything that you want to buy for 200 grand. But that is literally the reality that we're working with. So because it is so easy to mess up and the market wants you to mess up, we need to have a clear and exact plan on how we trade before we even start live trading, so that doesn't happen to us. To avoid this, we do our due diligence, we prepare and think about every possibility we can, how our strategy can work and break. Your strategy is a living and breathing process of constantly improving performance. But we do not change our strategy while we trade, right? Living and breathing process means that we're constantly improving the strategy and working with it, at least at first. But we don't do that while we trade. We do that in our thinking session, in our development session, not our execution session. All right, so at QC, our main strategies are swing trading strategies for crypto. Our flagship model, the QC dashboards, have been trading for years and generate over 2,700% in profit in the crypto market, regardless of bull and bear runs, without any leverage. So people know that in Discord, those are the QC dashboards. These, with an addition of other new bonds that we're developing and trading, are our main focus. With that being said, I have multiple talented traders in my close circle that are using and abusing the low cap coin strategy and have made tens of thousands of percent with it. Just last week, I saw an investor turn his initial capital into $30 million with one of the coins I will show you later in the session. So with that, I mean that we at QC, we don't trade the low cap strategy at QC, but I've done that privately, and I know many people that do that on a pretty much daily basis. And that is specifically at the start of bull runs and at the start of alt seasons. So around this time, and I see those people every single day make a shit ton of money from it. So that's why we're covering it today. These are just the dashboards and our performance in the past couple of years. Okay, so what is a low cap coin? What does low cap mean, right? Low cap means that these coins have a low market capitalization. Market capitalization means that the overall money, simply said, the overall money that is in the coin is very low. Overall money in the coin means the market capitalization is how much US dollars, in US dollar value, not the actual coin value, is in that coin. Now, for beginners, this might be slightly confusing because you can see coins like Doge that are, a couple cents, and then you can see coins like Solana that are $130, and that does not necessarily mean that Solana is worth thousands of times more. There's just more coins in circulation for Doge, and that's why the price of one individual Dogecoin is lower. To explain this, we can go to CoinMarketCap, where there's a ranking based on market cap, and here you can see it. So just, very simply, Bitcoin is around $68,000 right now. Ethereum is close to $4,000, but that does not mean that Bitcoin is worth more, worth like 10x or 15x more than Ethereum. What that means is that the overall circulating supply of Bitcoin is much lower than the overall circulating supply of ETH. And so we cannot look at a value of a coin based on its price. We need to look on the market capitalization, right? So, and low cap coins means that those are coins when there's not a lot of money in it. And when we look at, the top 10 coins, which are, billions of dollars in market capitalization, when we have a coin that is very, very low, an unknown coin that has $1 million in market capitalization, and then, get some traction and get some hype around it, then that market capitalization grows a lot. An example for that is going to be a coin that we're going to cover multiple times this session, but it is Render, RNDR. And Render, has been at a couple $100 million of market capitalization, or tens of millions when I saw it the first time. Right now, it's at 3.6 billion, right? So we don't go based on price, we go based on market capitalization. Because when we look at the overall market capitalization of crypto in general, which is, a couple trillion, when we go to here, we will see it. we can just go to total right here, and total has a market cap of 2.5 trillion. So that is just a total market capitalization of crypto. All right, let's go back here. So that's what market capitalization means, and that's why this strategy, if you find the trends early, is that effective, because we go into coins that have a very, very low market cap and, you know, in the millions of dollars. So when there's any hype around them, then money flows into them. And if you go from a $1 million market cap to a $1 billion market cap, that's a 1000x, right? And I'm not saying that every single coin is going to 1000x, but even a 2x, 3x, or 10x is, you know, pretty straightforward. And in a bull run where all coins, or like basically the entire market, is growing a lot, and you have a coin that has a $1 million or $2 million market cap, for that to go to $20 million is not that hard. But for you, it's a 10x. So that's where the leverage comes in. That's where the profit comes in from that uneven multiplier to the growth. Like if Bitcoin gains, you know, what, $100 million in market cap, you barely see that in price. If, you know, one of your coins gains $100 million in market cap, then, you know, those are insane numbers. So that's the idea of it. However, the way we execute it is very, very specific, and it's very similar to how we trade our dashboards. All right, so the prerequisites in order to have success in this: basic understanding of crypto, core market fundamentals in trading, because we're at the end of the day trading charts as well, understanding bull runs, how does a bull run form, what happens in a bull run, you know, outside money flowing in, where does that money flow to, what are the stages of a bull run, does it go into Bitcoin first, and then after Bitcoin, where does it flow, where else does it flow, how does the money trickle down into crypto, where does it start, and over time, where does it go, and emotional control to hold through drawdowns. All of these things. If you're not sure about any of these topics, no worries for the people watching this on YouTube. We cover all of these factors in the QC Discord, and we have a bunch of videos going over emotional control and core market fundamentals and all of these things. So you're covered, don't worry. All right, so let's cover what the low cap coin strategy actually is. This strategy takes a principle we know and love at QC and applies it to the volatile potential of the bull market, which is distribution. Same as we trade our flagship model, the dashboards, which are multiple negative correlated strategies equaling consistency, we apply the same principle to find the next 1000x coin, right? 1000x might be exaggerated. We don't even need that. We're not looking for that. We're not looking for home runs all the time. A 10x is plenty, right? How do we do that? Systematically. So every bull market has trends. Previously, it was AI, gaming, fintech, memes, and so on and so forth. There's always trends, especially when there's a large number of new people coming in. They go, same as in social media, they go off of trends and follow trends very, very easily. It's actually crazy. There's basically no critical thinking that they have themselves. No offense, but people just go in and follow trends that are already established or that are establishing and growing. So that is a very, very easy way of investing for people that understand it. If this was 20 years ago and you asked someone on Wall Street, you explain someone on Wall Street what the crypto bull run is and how predictable growth of different coins are, they would think that that's insane how easy it is, right? And that's the situation that we're trading right now. So we want to take the biggest advantage from it. All right, so every bull market has trends, right? What we want to do is catch these trends early, but without the risk of missing the move. In order to do that, we won't just look at individual coins, but whole sectors, right? We're going to look at it from an investor perspective and not from a retail perspective, which is something that we do across the board when we trade.
So let me give you an example. This is how one of our investors, and some of you guys might know this story already, but this is how one of our investors 100x their investment and made over $30 million from this one trade within a year. Our investor, which also invested into our hedge fund, with decades of Wall Street experience, got engaged in crypto and started to be very passionate about it. Why? We asked him, and he said that it reminds him of the early days of trading gold, which I don't know when the early days of that were, like, 1700s or something. I don't know. He's old. He's like 70. In doing so, he was looking at the overall trend of crypto, social media, and current technologies. And it was just after, so that was January, February 23, right? So that was just after ChatGPT came out a few months ago, and the trend of AI was pretty clear. So instead of just picking a coin and hoping that it takes off, he looked at the entire AI crypto sector and looked at the 15 most promising coins and invested evenly in them. And obviously he was early in all of them. Most coins did not have too much, did not move too much, but two took off, and as they did, he moved the investments from the other coins into the two main coins. After that, he was just holding his investment and, adding into it over time, which is now worth over $30 million, and he's still holding it. And we can see that in the wallets. So the coin he invested in is RNDR. And when we look at RNDR, let me just open it real quick here. So when we look at RNDR January 23 is here. So that's around 30 cents. And that he was already positioned when he started to talk to us about it. So most of his investment was somewhere here, around 30 to 40 cents. Right now, the price is at around almost $10. So from 40 cents to $10, that's 2,400%. And he did not enter with $1,000. He spent multiple weeks entering. So he entered at that time with close to $2 million. And he was trading in and out of it. But his investment, his pure profit is at least $30 million right now. And that is not because he spotted RNDR and traded it. That's because he looked at the sector, noticed correctly that the AI sector has growth potential. And RNDR, he did the research of what RNDR is, which is a decentralized way of rendering whatever you want to render, right? So it's basically graphic cards that are managed with a decentralized blockchain, which is a great idea. And graphic cards, as you know, are more and more in higher and higher demand, also because of AI, and AI needs a lot of graphic cards to run on. So this was just a very, very logical sector that was gonna grow. And he entered this, a year ago, and and he had big multiples on that pretty early. Even right after his investment, he had an almost 500x on his investment. But the real money came in when he was patient enough to wait for that bull run to start, moving, where at this point, we just reached $10, and I have it on good authority that within the next days, we will go to $17, which is, something that I have heard. So that's what he did. This is just one example of multiple situations that I've seen where people found extremely high multiples in early coins. The AI sector is just one example. Gaming, memes, and anything else you can see as trending are also other examples. The idea is to catch a sector move instead of a specific coin move, and by playing on a higher perspective, you distribute your risk and benefit from the entire sector movement. So we're not trying to find the needle in the haystack of the next $1 billion coin, right? what we're trying to do is identify sectors that are going to be trending and invest in those sectors distributed. And then some of the coins that we evenly invested in are going to be the unicorns, right? But we're not trying to find the unicorn. We're trying to, as an investor, distribute evenly and then see which of the investments take off. The good part is that the entire market is biased to the upside. So unless the coin gets a lawsuit or, is a clear scam, it's probably at least going to hold its value. So even the coins that you invested in that, are not going to take off, they're still going to have some improvement in value, and even those should end up being positive. So, and then if one or two coins take off, then the probability of your success of being positive at all is very, very high. So that is the idea of it. And this is one of the most straightforward strategies to see large profits in a bull market. And that's based on what I've seen around me. And the good part is that it's not rocket science. It's more of understanding society and understanding where trends are going to go. If that is your skill, or if that is something that you think you're doing well, then you will do well in this situation as well. Me personally, I look at coins, I follow coin prices. I like high predictability, so that's why we have the dashboards in the first place, and that's what we're trading. But when I get, good advice, trusted advice of different coins, then that is something that I'm looking at. How do we find low cap coins? So now the big question, how do we find the sectors and coins that will 100x? Okay, so there's multiple ways that we can do this, and these are obvious and straightforward ways. But again, the difference is how we look at it, and what we're looking at and what perspective we're using with it. Okay, so number one is finding them on Twitter. Twitter is the main hub for crypto news and a good platform to find ongoing trends early. By default, Twitter is focused on trends, and also Twitter has most of the crypto news, so that is a good place to start. By simply typing in any sector or just crypto, you will find many new coins. Now, here's what's important. The trick is not to just buy the coins that people are advertising, right? Because then, by definition, again, understanding the market, at the time when it's trending on Twitter, there's already a lot of people in it. We're trying to catch the trend early, right? So just aping into a coin that has already had a 1000x is not the best idea, unless you have on good authority that's going to grow more, like RNDR, because it's just a bull run. But that is not the way to go. We want to look at it as an investor, and look at what sectors are getting traction, right? So if you see multiple coins being advertised and multiple coins taking off within one sector, then you might be like, okay, well, the trend on this sector is growing. So I might not have to invest all my money into the top coin that already 100x'd, but if this sector has any relevance, then I can look more into the sector, look more into, are there any coins that are similar to the top coin but haven't seen the light of the day yet? And if they haven't, then these might be good investments if the overall sector is good, right? So what coins, projects in that sector that are similar to the top coins of the sector but haven't seen the light of the day yet? That's something that we're looking for, right? And then once we have seen a sector and once we have seen a potential trend, we want to validate it with Google Trends, for example. You can also just look at Twitter, but Google Trends is a great example because it shows you the search and the trend on the internet of any keyword that you put in, right? For example, AI is a great example. We can see it has been pretty much flat for over 20 years, and then it started taking off recently. Okay, so we can look at that and we can be like, okay, when did it start really taking off, and when did RNDR take off. So RNDR, we said that our investor, he started buying RNDR, well, even in 22, but really January 23. Okay, so let's see. Where is January 23? This is when ChatGPT came out, and then we have January 23 right here. So it's the start of the trend, right? So you see a huge start of the trend of AI on Google Trends, right? So then and those are the same people that are on the internet, are the same people buying crypto, right? So when there is a large trend into anything going on, then that thought process is going to be transferred, obviously, into what they invest in. So catching a trend early on Google Trends and catching a trend early on a coin sector is essentially the same thing. And catching the sector early and distributing your profits or distributing your account puts you in a very, very good position that if this trend continues to grow, you're positioned to have large multiples of your money. And this is where a lot of the wealth is created in bull markets, is early coins and being able to spot sectors, not coins, sectors that are going to be trending. Let's get back. So that's number one, finding them on Twitter, looking at what sectors have traction. And then once you have found the sectors, then you can look into individual coins that are the best performing right now. What are those coins? Do research about the projects themselves. And if that project is good, how does it look like? What do they do? How does their team look like? You can find similar projects that are not valued nearly as high yet, and those are the coins that have a good potential of growing, and that's where you want to distribute across 15 or 20 coins. You want to distribute your portfolio in that sector, and yes, it's going to take work, but when you do that, you are positioned very, very well to have large multiples in a bull market. So we can find them on Twitter. We can verify those trends on Google Trends. We can find them in other groups. High quality Twitter, Telegram, and Discord groups are a great place to find high quality coins. The harder it is to get into the group, the higher the quality, the information in it. So this is where I got most of my coins. I get most of my low cap investment suggestions from 1 to 2 high quality groups of other investors and hedge funds that I'm part of, and I can trust that these players have been thoroughly studied and evaluated before they got posted in those groups. Because when you are surrounded by people that are investors that have done this a lot, and they are the ones suggesting a coin, I don't even have to check or do the research of that coin because I trust that person and I understand that they know what they're talking about, or they have a pretty large majority in that coin already, so they are in a way in charge of where the price is going to go. So in those situations, it's a very, very simple investment. And those investments are rare, but they happen more often the higher level groups you're in. How do you get in higher level groups? Easiest way is you pay for it, right? When there's an expensive group, you pay for it to get in, and then you have good advice, you have high quality people around you, or you provide value that is high value for them, like, having returns in crypto or having a lot of knowledge about something or being able to code or something like that. Both me and Moonwalk are in multiple groups where we got in because we can code, or we got in because we have dashboards, so on and so forth. So finding groups is a good idea, and then the higher quality the group, the higher quality the investments, and the larger multiple of your investments you're going to have. If you just go to a random group that you don't know, that has no proof of concept nor no real good knowledge that they give out, and there's people there advertising some coins, well, the validity of that is probably pretty low. If I go, and I would have to do a lot of research to even consider going into a coin like that, as compared to, you know, one of the group chats that we're in, someone posting a coin, someone that, you know, has done millions of dollars in the last bull run. Well, I'm not even going to think twice, and I'm going to buy that coin right away. So that's the power that really people have, but that's also because there's proof and validity that what they're saying, you know, has a good concept. All right, the next one, you can find them at QC. Our QC Trading Discord is the hub where our community meets and where traders and investors, including me, share their knowledge, ideas, and plays. So if you want to make money in this bull run, but don't know where to start or have already a lot of experience in trading crypto and want to find like-minded people, you can go to the Discord, and that's the place for you. Here, there's a screenshot of me talking about RNDR this January 2024. And January 2024 was when RNDR was around $3, and right now it's at 10. So if you did that, that would be a comfortable 3x. And also, I posted today in the Discord that I have it on good authority that it's going to go to $17. Last time I said that something is on good authority, it went from $3 to $10. Okay, so now we know the strategy. Now we understand how to find projects and sectors that we have a high potential of success. But there's still one very important factor that will make or break your low cap coin strategy, which is your allocation. Because we're playing a higher level game, we're looking at sectors. Instead of looking at individual coins and putting all our eggs in one basket, we need to allocate our funds accordingly. With that being said, we want to always allocate our funds evenly at the start, not skewing odds to any one coin. Why? Because we're playing a numbers game, we don't just go based on feeling. Even if you feel like one coin out of the 20 you're investing in will definitely take off, maybe it will, but it might not. And if it doesn't, and you allocated, say, 50% of your portfolio in it, you will not have enough juice to make up for your drawdowns with the coins that actually win. So the point of this way of investing is at first to evenly distribute your portfolio into a sector. You're betting on the sector, not on the coins. The coins have no additional value compared to each other until you start seeing movement. So at first, we give every single coin that you have done research on, that you have deemed as valid to invest in based on other coins that have done well in that sector. You distribute your portfolio evenly. You do not put in your bias, and then when you get actual data, then you can build on top of that. Because what people do now is they are excited and happy and jump into a sector and find, instead of 20 coins, which I said you should do, you will find 3 coins, and out of those 3 coins, you will put 80% of your portfolio into one coin. So instead of, trading the sector, you're trading 1.5 coins, random crypto coins. What is the chance of success there? When one coin takes off out of 1,000, pretty low chances, right? Because you're not looking at the sector level, you're looking at the specific coin level, and then you're just gambling like everyone else. So what you want to do is look at the sector. Once a coin takes off and you see further potential, then you can move some assets to it. So you see, out of the 20 coins, 3 are taking off. The other, now, this is really a factor, how much you can invest in, or how much of a percentage you invested in at first. If you have, distributed your entire portfolio somewhere, which I would not recommend. By the way, none of this is financial advice anyways, educational purposes only. So if you invest most of your portfolio and you see some coins taking off, then it might make sense to then, after you have the data, move some of those initial coins that do not seem to gain any traction into the more volatile coins that are moving up. So that's number one. Number two, if you don't, or if you have a larger amount to invest in and you invest a distributed lower amount into every single coin, then it might also make sense to just keep adding into the coins that are taking off from outside money and just leave those initial investments there in case some other coins start taking off too later on, which is an extra bet that you're taking essentially. So if you're looking at this as from a risk management threshold, you want to make sure to then start moving those allocations to the data that tells you where the success and where the money flow is going to. So that's that. So we looked at what the strategy is, examples of using it, how to use it, where to find the coins, making sure to look at sectors and not individual coins, distributing evenly, and only then skewing your attributions once you see actual data in the market and not just your feeling, because none of this is based on your feeling. All of this is based on actual real world KPIs that are your guiding stones, right, Alex? So there's that. The antidote to FOMO. FOMO is the killer of retail traders, and this is something that we see in trading all the time. We all have it. It's okay. It's a natural human reaction that people have in the market. The important part is that we don't let it affect us to a point where we start doing unreasonable and irrational actions. So the most dangerous aspect of trading for almost all traders is FOMO, fear of missing out. It is irrational. It is an irrational emotional trigger that will make you do actions that are not logical, like exiting too late, entering too late, jumping out of good trades, or jumping into very bad trades just because people are excited about it. FOMO is a natural effect trading has on human psychology, and it cannot necessarily be avoided when trading manually and focusing on specific trades. However, what you can do is set up an automation that trades in the background with the same high level of perspective that we just talked about, trading multiple strategies at the same time and automatically distributing your portfolio. I know, sounds optimistic, but at QC we've managed to do exactly that. So our QC dashboards are sending out signals that you can use for auto trading, which are the same signals we're using to manage private funds with a monthly volume of over $30 million. This is how the dashboards look like on your website. By the way, the people that got the dashboards, you will get access to this very soon. Always have an allocation, so if the market rises, you profit. I'm biased, but the feeling of waking up after a long night of sleep and seeing a 160% profit on our account while other people are experiencing FOMO is a very good feeling, which is one that our QC members can experience. The beauty of our setup is that we have allocations both in main coins and altcoins, so any movement that happens in the market we take advantage of. And whenever someone asks us if we caught the move without having to look, we can say yes, because we're looking at sectors, right? We're looking at main coins and we're looking at altcoins. What does that mean? And this goes more into the psychology and also the mechanics of how a bull market works. But essentially, you can look at it as a funnel. And the factor, if you're at the top of the funnel or at the bottom of the funnel, is time. So as new people come into a bull market, which just means that people that have not been in crypto before or have been in crypto in the past bull market and left, probably burned their account, are coming back now. And they start with the obvious coins. So it's either, some hyped up meme coins, the shitcoin market, and Bitcoin. And then as time goes on, they learn more about it and they go deeper and deeper down the rabbit hole. And then, those sectors that are not obvious at first will start gaining traction too. Which you would be like, okay, well, why do I want to invest in a sector that is going to get traction later? Well, because the first sectors confirm that you're in a clear bull market, right? And you see how much money is going through that funnel. So as you then wait you have time to establish yourself in those later sectors. So once the wave hits and those people go through their process of thinking and basically process of retail trading and get down to that sector that you invested in, then you have a larger probability of success that that sector is going to take off. And a very similar approach we use in the dashboards, where we have a couple strategies that are trading the main coins and then a couple strategies that are trading altcoins. And we know, or we look at the market when there's a shift between the main season and the alt season, and whenever the alt season happens, then our strategies trigger to, focus more on altcoins and the big movements on altcoins. And that is something that the screenshot has been taken yesterday, where, in total we have what here, like 90%, 97% in profits off of altcoins, right? Bitcoin was taking off too, but altcoins were taking off more. And because the volatility is there and we understand how a market is structured and how a bull market is structured, we can make profits off of that too. Okay, and we have a list of low cap coins that I have collected and written down based on the things that I've heard around me. If you want a list of low cap coins, like this video on YouTube, if you're watching this on YouTube, and if you're not, it's going to be out on YouTube in a couple hours. Comment list under the YouTube video, and then join the Discord if you haven't already, and I will personally send you the QC recommended coins and sectors for the upcoming bull run. So that is essentially everything we wanted to cover today. For the people in Discord, we can look at the current market now. Just check it out. Let me go to total 3 right now, which is something that we've been tracking for a while. And if I go to the daily, you can see that growth here. And if you remember, we have been looking at overfitting a couple of days ago in one of the videos, and I said that an overfitting strategy would be to look at the monthly total 3. Whenever we reach the overbought region, we start taking off. And then I laughed about it because I was like, okay, this actually might be a very valid strategy because it is on a very large scale. And this happened in history of total 3 once, and this is the second time. But it looks like right now, this is something that might happen too. So yeah, the next couple months might be interesting, and based on the all-time highs on Bitcoin, we expect a larger market cap on total 3. Total 3, for those people that don't know, is the total crypto market cap excluding Bitcoin and Ethereum. So that's total 3, and it's looking bullish. So just by that, looking at low cap coins, looking at different sectors makes a lot of sense. Dashboard wise, we don't have to do anything new, but there's going to be a lot of alt trades in the coming time, and strategies like Doge, the Doge strategies and so on and so forth will start trading more often. And those are made to catch the big moves. So whenever Doge starts moving a lot and so on and so forth, those are the times when we're going to position ourselves. And if we look at Bitcoin, and we look at the actual stochastics of Bitcoin, then, well, here we go. We're going to the all-time highs as we speak, which means that, most of our stochastics are going to be topped out just by default. So stochastic strategy wise, what we want to look for is anytime we bottom back out, it's a good time to enter more. Basically what it is, because we're in a bull run. So until we start seeing weakness, this is what it's going to be. We are going to look at good entries and good possible entries that we can have and grow or enter whenever the whenever the stochastics go back down, which is something that's going to happen less often. So as it happens and we're biased to the upside, it increases the likelihood of success of that one single trade. So when we trade this manually, this is what we can do here. All right. And really, I mean, just looking at crypto, there's not much more to say. It's essentially up only. And the larger outside of our trading and outside of our auto trading, which is something that's, you know, in place, the place to make large multiples right now, which is also more risky, but the place to do new multiples is on looking at sectors and looking at what is going to trend next. So that is something that we're going to be focusing on in the Discord, and that is something that we've been covering today. All right, so that is everything I wanted to cover. If you guys have any other questions, let me know. I'm in the Discord and we can talk about everything we just covered. You will get this PDF as well to look at. And yeah, I hope you guys got some value out of this. And if you don't have any other questions, I will see you guys in the Discord.